Bitcoin is on the brink. Is this the big one? The crash that levels the crypto landscape? But don't hit that sell button just yet. Before you make any rash decisions, you need to see this. In today's video, we're ripping apart the rumors, analyzing the charts, and getting deep into price predictions. Is a Bitcoin crash imminent, or is this just another storm in a teacup? We'll be separating fact from fiction, myth from reality, and giving you the knowledge you need to navigate this volatile market. So buckle up, crypto warriors, because we're about to decode the future of Bitcoin. First off, let's talk about the immediate market reaction. The sudden drop in Bitcoin's price has left many investors scratching their heads. What triggered this decline, and what are the key factors at play? One major factor is market sentiment. Right now, there's a lot of fear and uncertainty in the market. This has led to a massive sell-off as investors look to cut their losses. Negative news and speculation can often amplify these fears, causing even more people to sell. For example, recent concerns about regulatory crackdowns in major markets has created a wave of panic selling. How does this impact the Bitcoin price prediction, and what can we expect moving forward? Next, we need to consider macroeconomic factors. Inflation fears, interest rate hikes, and the geopolitical tensions all play a role in the financial markets. When traditional markets are volatile, cryptocurrencies like Bitcoin often follow suit. Investors tend to pull out their riskier assets and move into safer investments. How are these macroeconomic trends affecting the Bitcoin price today, and what does it mean for the future? Let's talk about the immediate impact of ETF outflows on the Bitcoin price. Why are investors pulling out, and what does this mean for Bitcoin's future? Recently, we've seen significant outflows from Bitcoin ETFs, leading to a notable drop in the Bitcoin price today. Investors are pulling out due to a combination of profit-taking and concerns over potential regulatory changes. This exodus from ETFs has created downward pressure on the Bitcoin price. But what does this mean for Bitcoin price prediction and the market sentiment? Historically, large outflows have often preceded price volatility, and understanding this can help us navigate the current market landscape. But that's not all. Speculation around the Fed's upcoming rate decisions is also playing a critical role. How could changes in interest rates impact Bitcoin? The Federal Reserve's interest rate decisions have far-reaching implications for the financial markets, including Bitcoin. With the Fed signaling potential rate cuts, investors are becoming cautious. Usually, higher interest rates generally mean higher borrowing costs, which can lead to a reduced spending and investment. For Bitcoin, this can result in decreased demand as investors look for safer, yield-bearing assets. How will this speculation affect Bitcoin price today, and what are the potential scenarios? Is it time to sell, or should you double down on crypto right now? Well, according to the latest reports, digital asset funds have experienced their largest outflows since March. This sudden withdrawal of capital is causing a ripple effect across the crypto market. The Bitcoin price today has been under significant pressure as a result. Investors are reacting to various factors, including market sentiment, regulatory concern, and profit-taking. How does this influence the Bitcoin price prediction, and what can we expect next? Historically, outflows have often led to increased volatility, and understanding this can help us navigate the current market landscape. But that's not all. Regulatory concerns are also playing a critical role. How could potential regulatory changes impact Bitcoin? Regulatory uncertainty is a major factor causing investors to pull out digital asset funds. With governments around the world increasing or considering stricter regulations on cryptocurrencies, market participants are understandably cautious. For Bitcoin, this means potential headwinds that could affect its price. However, regulation isn't all that bad. Clearer guidelines can also pave the way for more institutional adoption, which could be positive for the Bitcoin price in the long run. How will these regulatory concerns impact Bitcoin's price today, and what are the potential scenarios? So why are sellers flocking back to exchanges, and how is it impacting Bitcoin's price today? Recently, we've seen a significant number of Bitcoin sellers returning to the exchanges, causing a notable impact on Bitcoin price. When large amounts of Bitcoin are moved to exchanges, it typically signals an intention to sell, creating downward pressure on the price. This influx of selling activity has raised concerns about the Bitcoin price prediction and whether we might see further declines. What's behind this trend, and what does it mean for the Bitcoin analysis? But that's not all. Market sentiment is a crucial factor here. How is fear influencing these movements, and what are the broader implications for Bitcoin today? Market sentiment plays a pivotal role in driving Bitcoin price fluctuations. Currently, fear and uncertainty are dominating the market, leading many investors to sell off their holdings. Negative news, regulatory concerns, and broader economic issues contribute to this sentiment. When fear takes hold, we often see a domino effect, causing more people to sell and further driving down the price of Bitcoin. How does this sentiment impact Bitcoin's price prediction, and what can we expect moving forward? So why is Bitcoin price clustering around $64,000, and what are the key factors at play? Recently, we've seen Bitcoin price clustering around the $64,000 support level. This clustering indicates a strong support level, but it also raises questions about future price movements. Investors are closely watching this level to determine whether Bitcoin will bounce back or break down further. What's behind this trend, and what does it mean for Bitcoin's price analysis and Bitcoin's price prediction? Now, let's get into the technical side. What do the charts say about Bitcoin's current state and future price movements? Let's break down the Bitcoin technical analysis and see where we might be heading next. Okay guys, so here we have Bitcoin paired up with USDT. We're on the 1-day Binance chart, and we are of course taking a look at BTC's technical analysis here. Now we are of course tracking a 3-wave move to the downside. We were talking about this in the previous video, the video that we put out probably around 3 to 4 days ago, where we were targeting out of course the $62,924 to $64,235. This is a 3-wave correction, and this would typically be heading out towards the 1 to the 1.236 Fibonacci sequencing level. Heading towards our typical range, which would be in that range of 62,900 to 64,300 approximately, in that range, is going to be where you most typically would find the 3 waves coming to an end. Now it's possible that it overextends, it's possible that it morphs from a 3-wave structure into a 5-wave structure. These things are possible, and you have key indicators such as the Fibonacci retracement tool that give you the insight into those as time progresses. But for now, we haven't reached our typical area between 1 and 1.236 on the Fib scales just yet. Okay, so losing the 50 simple day moving average was kind of an expected move here. We might still close above it, but I'm not. That we can see that resistance was really strong on the 50 exponential moving average at $66,883. That's the blue line that's coming through the chart here. Now, about 6 or so weeks ago, I was talking about the idea of moving down close towards our 200-day exponential moving average. This is still technically a possibility, but I don't think we're likely to see that play out anytime soon. That was more of a Fed pivot kind of situation, right? If the Fed do in fact cut their interest rates, I'm looking for us to move down towards our 200-day exponential moving average, maybe wicking down lower, but not closing down lower than the 200-day EMA. Now, if you follow the traditional ways of analyzing a market, you'll know that the 200-day EMA is your trend filter. While price is above the 200 EMA, we are bullish on the market. If price is lower than the 200 EMA, we are bearish on it, right? And so we are quite comfortably above the 200-day EMA at the moment. We have been stuck in a ranging market for quite some time on Bitcoin since the 14th of March. And although we have seen some volatility here, it isn't really anything terribly too unexpected. We've seen big corrections throughout this entire journey so far. For example, 3 waves coming down here, where we did see a very significant drop to the downside from the 8th of April down to the 1st of May, which was a 22.32% move. Most recently, this current move that we've seen since the 7th of June down to today's low is only 10.32%. Now, altcoins obviously are bleeding out more aggressively, a lot of fear in the market around those. And Bitcoin's actually holding up incredibly well, even though we have seen, really high outflows when it comes to ETFs, really high inflows when it comes to Bitcoin moving onto the exchanges, but the price itself is holding up very well. This is very much still in lower highs and lower lows on the daily time frame, and a big bullish kind of flag. We have the big parabolic run that we had to the upside during the whole ETF kind of saga, and then of course this ranging market here in this kind of bullish flag. And of course, if we do bring up our volume profiles, we can see that there was an increase in volume during the poll, and we have a decrease in volume during the flag. Okay, so we know that everything that's going on in this ranging market right here is actually just short-term price fluctuations, profit taken, and basically just shaking people out of the market. And the reason for this is that you get a bigger distribution that way, right? Bitcoin kind of flows in one general direction during these big distribution events. Now, this is very much a bullish flag because you can see that there isn't really much of an appetite for selling. That is evident from the decrease in volume since we have had the spike to the upside on the 14th of March. Okay, a decrease in the volume after an increase in volume pushing the price higher. Okay, so we know that there isn't really a huge appetite for selling BTC, and this is just ultimately a ranging market. Throw on some smart money concepts and you can see that we're still very much in bullish times. There's a few changes of character for sure on the smaller time frames, and we should be aware of those, but on the daily time frame, the weekly time frame, I'm not actually that concerned. If we bring up our stochastic RSIs, you can see just here we are in oversold territory on the daily and weekly timeframes. Puts us in actually a really strong position on a macro scale, right? So we don't want to be too concerned over the smaller micro movements of what is going on, and we want to focus more on the bigger macro moves because they're the ones that are going to be the big swings in the market that you can take advantage of. And as I was talking about earlier, is it time to sell or double down on crypto? Well, I'm taking the approach of doubling down on crypto, right? Whether you're dollar cost averaging into Bitcoin or dollar cost averaging into altcoins, I still see more downside, sure, but I do think that this is a great opportunity to be building out those altcoin positions who are like 50, 60, some 70% down from their swing highs, and Bitcoin coming down the way that it has done into these areas of support are also great areas for dollar cost averaging in my humble opinion. But guys, you can let me know what your opinions are in the comments down below. If you found today's video useful, insightful, smash that like button. I really do appreciate that. If you are new, subscribe and stay up to date with everything that we do here at Cheeky Crypto. And if you haven't done so yet, click this video right here and stay well informed with what else is going on in the crypto space.